everybody, Brian here from quantlabs.net. Today in this video I'm going to go over the mainstream asset classes using the CFD or Forex on Awanda. Today is the 19th at 5 o'clock p.m. Eastern Standard Time. So here's the Yahoo Finance. Markets are looking pretty strong as well. All the US crude oil is up as well as gold. Now this should be down, but it's up. I'm going to explain what seems to be going on. The bonds are up as well. All the Forex is up, crypto's up, but here is what you pay attention to. Crypto or Bitcoin's up 4.7%. So even if you combine all of these, I bet you still doesn't total 4.7. Also, when you have the CMC, it's up 1.16. FTSE's up a little bit, so the international's up a little bit. So, good news. Here's a report or headline from them: stock markets will rally, markets climb a wall of worry. But I don't know. When you get headlines this, Menard Powell no longer favorite for Fed chair job. This is what's driving Bitcoin. Is the Bitcoin futures ETF could trigger rally to 168K. On Bitcoin. That's amazing. We were talking last night on our 4.5 hour webinar, at least for sure, very close to 100,000 right now. Bitcoin's at 64,000. It's definitely hit its high. So there's that. All right. So enough of that. Let's start looking at our mainstream stuff. All right. So before I get started, what I want to make sure is I'm posting some really gold nuggets for anybody. You can go over to quantlabs.info for our latest conversation. Just post some stuff about incorporating and all that. And plus we have our good old email list as well, quantlabs.net/contact. Okay, put all your info in there. For that, name, email, if you want, phone number. Nobody, that stuff does not get released. All right, so let's get to it. Again, we're doing on MotoWave, harmonic scans 4 hour for all the major assets on Awanda. So you can see here, the Deutsche 30 is fairly choppy. It's just mean reverting. We are getting a mini rally here on the S&P. So then we're getting into the Forex. A lot of this is just really, I mean, if you want a mean revert, you could probably build a strategy around that and do okay. We put in high leverage, high risk to get any kind of return with it. But I just don't, I like trends. I like momentum. This up and down choppiness, range bound, what you're seeing here is just not good. Okay, but one thing I will tell you right now, I'm seeing more gold and silver coming up here. So this is telling me that the rest of the world outside the US is moving into gold, silver, into certain currencies. So here we have gold in Swiss franc. Here we have euro, British pound, a couple for Hong Kong dollar, Singapore dollar. Okay, so right here are where people are parking money in gold and what currencies they're comfortable with. US dollar is not number one, Canadian dollar is not number one, but these ones are okay. So continuing along, this is I was just saying to somebody, this is the most reliable indicator out there. This is what you can use alone for reversals on the market. So when you look at the, let's say, 1 month view, so when you roll it all the way back to 2006, February, you can see here our 2008 increase during that 2009 crisis. Market comes back off, everything's all good. So now as our debt concerns with the US government, and really of the West, you can see along the way, things are doing okay. But just here, taking us back to January 1st, 2020, we're now probably past the level of 2008. So what I'm saying here is that as the risk builds in that, we are now beyond what drove us off, potentially off the cliff in 2008. So we're beyond that. So here we go up now with when the pandemic hit last year and how much it's moved up, and as predicted it would come down, which is fine. But now as we start to build up our U.S. debt situation and debt throughout the world, they don't seem to give a rat's ass about it. That's all fine and good, but there's going to be at some point consequences, and there's two things that will come out of it. If I was to show you, let's say, a daily view, this is where it's at. It's flat and it's coming back a little bit, which is fine. But generally, on the weekly, well, better yet, the monthly view, just to get a whole picture of it, when it goes down, that's a good thing. But you can see over the last couple of months, it has been spiking and continues to spike. And there's going to be some red ones, which is fine. But overall, we're now getting to very dangerous territory, and there's no reversing this. So as long as you know about this ratio, gold, silver, that's your number one and most reliable ratio out there as this takes hold, and it's global as well. So one other thing I was highlighting here is how do I know this is true? When you look at all the currencies out there, what people are wanting to hold their gold in, the top ones, here you are seeing British pound. I think that's just due to the wealth of the country. Same with euro. Obviously Switzerland's probably your number one place where they store gold, and Hong Kong and Singapore. But the highlight here is you're not seeing USD and Canada and Australia, okay, for gold in those currencies. And that's due to, and even though those, at least Canada and Australia can produce a lot of gold. So, you would think those currencies would be a lot higher up here, but you're not seeing them. And again, that's just due to debt of those countries. So continuing along, when you have silver now, same pattern here, euro, pound, Hong Kong dollar, and then Singapore. Okay, so when you continue along, you're not seeing that. You're not seeing Australia, you're not seeing Canada, you're not seeing USD, but you're seeing pound, British pound, and the euro, and on and off you may see Switzerland. So that just says something where people are holding gold, silver in those particular currencies. That's why I use this. Anyways, then we have Australia. That's kind of doing okay here. Australia, Hong Kong, yay. But a lot of these currencies don't really mean a lot. So they're just all over the place. But there are some that trend. But this will come off no different than back you can see in August, and it just drops back. So it's really, if you're doing a buy and hold, it's not the best place to go. Same with gold, same with silver. So here you can see Euro and Hong Kong, just tank in there, Euro USD, and then again, look at the 1 month view. So looking good, I guess that's the direction you want to go. Deutsche 30. You can see that slight decline recently. These are good to hold, no doubt. Okay, like you're getting a really good trend there. The best one out of those definitely is US for performance, but I just don't know if that will continue. I think this is a temporary blip, but if you can lump the risk as time passes in those indices, US, also pound, or sorry, the British or euro. Here you got the Hong Kong, so you'll see how Hong Kong's been kind of suffering where that volatility, you see the trend up, but really that's not going to give you a lot of performance, and that will give you a heart attack every time you see it when it's going down, and maybe sometimes it may not come back. So here's our first sign of what I was referring to on the Russell. These are small cap for the US. Again, monthly view. Let me just hang on here. Monthly view here. So you can see this is where it's spiking. So if you are well off and I've got the capital in the US markets, you're going to do really well since the pandemic. I mean, that kind of spike is just unreal. That's because the Fed is just pumping so much money and liquidity into the economy of the US. wealth is just being accrued like going all the way back to 2004, like no other time. That's on the Russell. So if you look at the S&P 500, probably I could say the same thing on the monthly. So here you get a nice steady increase, get that big dip, and boom, once it starts flooding the U.S. economy with trillions of dollars, the only ones that are reaping benefit from that are the ones that are holding anything U.S. stock or U.S. index, and you'd be doing very well. But you can start to see it's starting to flatten out a little bit there. So will there be a catalyst that will drop this back? So hopefully for those that have done well, that they're going to start pivoting into other areas. Again, Forex I'm not a big fan of anymore. It's really, you just look. This view here, USD Hong Kong, like, do I need to say any more than that? Here's a US Canadian, which is really an oil trade. So there's not a lot of performance here. It's just gone flat since 2015. And that's a major currency. We'll see Euro USD in a minute. So to hold that as a long-term place is definitely not the place because of the volatility. USD Sweden, let's look at the monthly view here. Again, compared to the US stock market. All right, so we hear about natural gas. That was doing fairly well. Nice increase, nice little rally, dropped back in August, September, and now it's starting to mean revert. Crazy volatility and started to drop back. So here's the problem. I always hear about inflation talk. I'm getting to a point where that's kind of pre-planned, okay? If really our natural gas was going up, why is this not going from a rally in the price? We're not seeing that. It's actually coming down. If they will tell you there is an increase in, let's say, natural gas, it's because of labor. It's because of the logistics to get it out there, which is possible. But again, for investment, just not the best. The best one right now is definitely oil. I cannot deny that. So more of the usual. See, here's a nice rally here. I do like this since September 26th for all October. That's a nice rally in Australia USD. I do think that is a legitimate one that's just due to the global or lockdown that the country's in. Australia has had an impact as they open up, which is a joke. So instead of 5 miles, you get to go 15 kilometer radius, which is kind of a joke. Anyways, but Australia has, like, at least the currency's benefiting there. Okay, we looked at the Deutsche 30, we got NASDAQ. Here's another one. So you can see here, it's got a nice rally. It's coming back down, rally. Always buy that dip, maybe. I'm not sure if that's going to continue that type of style of trading. But again, you can see that big steepness I was talking about since the pandemic, because the market's getting flooded by the Fed. So I do think what will happen here is that if things don't go through, which I don't think that's possible, hey, why not just add another $7-8 trillion of these stupid packages like the reconciliation? I mean, the infrastructure is a definite one that's needed, but the reconciliation, like, give me a break. It's just a gateway to the U.S. going into a form of socialism. So there is that. So be aware. So that's a good rally, though, if you have been part of that. This one, UK 100, this is a good comparison. But again, you see the volatility, it goes range bound, boo, 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 not much going on. But holding it is nothing wrong with it. But you could see here the mean reverting, really going nowhere, and that's the UK 100. Okay, but if you're in the US, boo, you'd be doing really well. So here's oil, all the way back to August 22nd, and that rally, prices increasing. This is where your inflation kicks in. Gas, anything related around oil, producing, I don't know, packaging, blah, 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 everything coming out of oil, that most likely is being affected. So that is true. So here's the monthly chart. Would you buy and hold it? No. You just get in during those rallies. You can see that's really happening. Okay, let's look at the France CAC 40. Again, you can see this is, I believe, 4-hour view. You know, this is a road to nowhere. Why would you hold that? Okay, again, monthly view, kind of good rally. Okay, but just that big drop during the pandemic, and it's recovered. Oh, it only took April this year, so that's a probably good number of months, 4 or 5 months, and beyond. Okay, so the best place to have been is definitely in the U.S. markets, no doubt, and recent with oil. So let me pull up another chart here, just to show this, really important. So what was I going to show? Oil, I do believe I showed. Okay, let me just show you. Let's say, I don't know, gold over, let's say USD. Let's just say, okay. So this is gold, okay, and it's going nowhere, really range bound, 1 month view. Really, honestly, you see that rally, 2009, came back off, and just now in January 2019 started to spike and went flat. Not a very good investment. That's all I can tell you about gold. And silver's probably no different. Palladium, all that. Don't tie up your money in that. Maybe 5%, if that, of your total portfolio. So here we have the 1 USD Swiss franc. Let's see how that's been doing over a monthly view. Pretty well. Real crap. This is just a reflection on the country itself in, let's say, a place like Switzerland. Let's look at the 3-month view. I mean, it's all the way back to 2003. It's just a lot of the status. It's gone flat. It's not the same. I'll also pull up Singapore as well, because that'd be an interesting place. Let's take a look at Sweden in terms of wealth. So you can see this is going nowhere. Monthly view, kind of, I don't know, not much to do there. Okay, gold again. Gold, boom, boom. Okay, so we're starting to see silver and Canadian dollar. This is probably not going to look pretty. Not pretty at all. Just recently, and it's drifted back. I don't know. Better places to put your money. And more predictable as well. Japanese yen, we have not talked about silver in Japan. I forgot about that country. Nice rally here in silver. That's all the way back to, what are we looking at here? September 29th. So that's looking pretty good. Let's see how Japan with silver's been doing. Again, big spike, gone flat. No, thank you. New Zealand, same thing. Monthly view. Yeah, same thing. Okay, continuing along. Okay, here's the Australia 200. Let's see how bad that's been. Actually, it's not too bad. It's better probably in Europe, maybe similar, but definitely US would have been better. I'm really surprised it's been doing that well, considering how tyrannical that country's been. That's Australia again. Okay. Yeah, this would be a good one. Australia, Singapore. That's a good comparison. Let's see how that's been doing over the last month. So here, no different than with Switzerland. The only difference is that the decline for Switzerland, it's just been delayed till 2014. People don't know, but Singapore has got some serious debt situation on a per capita basis. It's a pretty capitalist system, but for society, it's pretty socialist, and they pay for that. Okay, France, I think we already done that. Euro performance against really choppy. Let's see that monthly view. Again, decent performance, but I think US is just better. More solid too. Not much with the Canadian. I'd be interested to see how the Canadian, you can just see that decline there. Boom, very choppy, just kind of like the road to recovery. I believe doesn't look like it's anything to do with our doofus leader, but our good days are probably back in 2009, and since then in Canada we've pretty well gone nowhere and suffered with the debt, thanks to our we call them chief SOX Sparksuckle Socks or whatever his name is, but whatever. Moving on. Let's see here. Oh yes, it was in Canada. Blackface Sock Sparkles. Love that nickname. Anyways, Hong Kong, again, monthly view, just solid decline. Oh, thanks China, appreciate it. Euro USD, same thing. Just everything in the West is just a reflection on quality of life and the whole 9 yards. Interesting though, when you get countries like the Rand, like look at that, the difference between the West and a country like South Africa Rand. Anyways, Netherlands might be a surprise as an index. Decent performance there. Again, the U.S. is definitely more consistent, stronger on the response after the virus has been done. Another country that can be really surprising is Taiwan. Let's see how that monthly view looks. Look at that. It's just grown very, very strongly since this year. Really bounced back. I mean, that's performance. And to be honest, outside of the threats of the CCP, this is an economy that you'd put money into. Solid performance. Little decline there, not as bad as the U.S. or anywhere in the U.S. really, and it just recovers fast, and it's just been really solid. Just unfortunately, the last few months, it's been because of all the threats. But this would have been a really good country to put money into. But it looks like when you look at whenever the CCP threaten or want to put their hands into something, it's just the performance is not there. You're not seeing also the China 50, I believe, or whatever the number in their index as well. It's just not coming up as one of the better ones. Let's look at UK. I think we looked at this. Again, not very good. But the U.S. market's been looking pretty good. We've already gone through those. Hungary might be an interesting one. I mean, look at this. Performance, really strong. It has been flat. It has not dropped off. So Hungary's another one. I think Eastern Europe overall, just nice steady incline on that currency, on the Hungarian. Really strong. And I can also bet you Poland as well is the same, similar to Hungary. I personally think these countries don't really need the Euro Union anymore. I mean, not as strong for Poland versus Hungary, but Hungary's looking pretty good. Again, let's look at, I think we looked at this USD and the Swiss franc. Yeah, it's just a solid decline and been flat compared to countries like Taiwan, Hungary, Poland. They're just looking better. Okay, here's an interesting one. Not as strong as you'd think, and that would make sense. That's the Czech. Monthly view. Yeah, it's been up and down. Not very good. Sweden we already looked at. Singapore, not what you think it is. On that monthly view, it's been in decline. Unreal. Decline and then gone flat. Not very good. That's for USD in Singapore. So that's very similar to Switzerland. Okay, we've looked at these, natural gas, all that. Okay, sugar is an interesting one. If you had asked me, would this be a good investment with sugar? No. When you look at August, no. It's been flat and in decline, but it's been in a steady rally here from, let's see here, July 13th till mid-August. Again, not inflation trade when it first came out, but again, you're not seeing the inflation when it's the raw sugar. You're probably paying extra costs for the refining, extra costs for logistics, and just any form of handling wholesale. That's where you're paying through the nose. But look at what's happened. This would have been a great one, 2008, 2010. Really strong rally there, and that's since January. So who knows? This might be a good one to buy into, but when you look at, is it a seasonal thing? And it looks like it is, where it will rally and then give it 9 months where it starts to peter out, and we're at that time in 2021. Wheat, you think agriculture is a good one. You're seeing these come up, but again, very flat, range bound. Let's see the monthly. Again, peaking and just going down. It's starting to rally a little bit, so that's quite interesting, and it's maintained and showing no weakness there. So wheat is an interesting one. Agriculture, corn. Let's take a look at the monthly here. These are good buy and holds by the looks of them. No, this one's in solid decline all the way back to March, so it's been in a decline. But that rally started in April last year, up until for a year. So I'm not sure if that's seasonal. But wheat's a good one, it looks like. But that's probably on the tail end of it. Let's see what else we can look at. Surprisingly, to see the South African rand do really strong. You can see this has been steady. This is the pound and the rand here. Monthly view. No, I wouldn't call that great. New Zealand's not been pretty strong at all. We've looked at the German, no, Deutsche 30, NASDAQ we already know, so we're already in the good. So again, really good insight. Now, again, let me take you over to the Yahoo Finance. This is where you're making money, right here. Bitcoin probably in the last 24 hours beat all of them combined, I bet. I don't know. But you might, if you just added Bitcoin and the CMC Crypto 200, I'm sure that they must have beaten out all of them combined. But that's where the growth is right now. And, well, hopefully you're watching my videos to learn that. So there's a couple of places to look at to buy and hold in certain areas. A good one that did not come up, which a lot of would surprise people. Actually, there's two. Is India. Let's see here. Let's see if I can find it. I'll also pull up China just for, as I say, bleeps and giggles. Okay, so here's India. Look at that. Okay, that's pretty incredible. That's probably going to beat out the U.S. Very few red days, and just recently it's really picked up. Now even on a four hour chart, well, let's say 6 hour. Look at that, nice rally. That's awesome. That's India 50, okay, right now. What's doing really, really good. Another one that's been surprisingly good, let me just check to see if this rally is continuing, is the USD Thai baht. Okay, so it's been rallying here September up until peaking here September 28th, gone flat, declined, and gone. But let's look at the monthly. No, it doesn't really excite me. But here, I don't know, kind of shaky. But India, ooh, that is looking good. All right, we'll leave it at that. Again, get in on the fun stuff with the contact, the server, chat server, quantlabs.info, as well as our daily newsletters, quantlabs.net/content. We shall talk to you later. Have a good day.